Secret number 3 is how to build wealth and retirement income without saving through your home. See, the home is a wealth building machine. Now, here's what I mean by that. The home or real estate grows wealth. You're making money 5 different ways simultaneously. Very few people are aware of that. So let's go ahead and go to the next slide. Here are the 5 economic benefits of real estate. Let's start on the left of your screen where it says appreciation. Now, I'm starting there because everybody's aware of this. You buy a house and the property value goes up, right? Home value goes up. Everybody knows that. But most people, including most agents, that's all they're aware of. And when they talk about the home and it going up in value, here's what they're not talking about. They talk about appreciation, but here's what they're not talking about that's more important: return on investment. See, here's what return on investment means. Return on investment means how much money are you making on the money you invested in whatever it is you invested. What is shocking, and this is why I created our Real Estate Wealth Academy, is 99.9% of real estate agents could not tell you the return on investment on their own home, let alone any of their clients' home. They don't have any calculation. They think appreciation rate is return on investment. It is not. It's not close to being that. And the return on investment in real estate is these 5 economic benefits. So appreciation is just one of those factors. Now, California statewide, the average appreciation rate dating back to 1968 is 7.3%. That's the average. LA, Orange County do better than that. So 7.3%, they would look at that and they being, I say, most agents will look at that, or even consumers will look at that and say, oh, 7.3%, that's my return on investment, 7.3. Not true, because that's the way stocks work. That's not the way real estate works. Your return on investment is dramatically higher, and here's why. Number 2 is leverage. Here's what leverage means. When you buy a house, most people don't pay cash. They finance the house. So the leverage is the financing, but here's what's powerful and profound about this is, let's say you bought a house 5 years ago for $500,000. You put 5% down. So 500,000 times 5% is 25,000, which means you finance 475,000, right? Well, so you're making money just on the 25,000 of your money you invested, but you're making money on the bank's money, or the $400,000. And that is absolutely huge. Now, next is mortgage pay down. Every time you make a mortgage payment, a percentage of that mortgage payment is principal, which is your loan balance. Your loan balance is going down. So you got the house going up and you got the loan balance going down. After that is rental cash flow. Now, if it's your home, you may not be renting a room or anything, so you don't have rental cash flow. But here's what's become huge, which is ADUs, which stands for accessory dwelling units. Well, the other one is Airbnb. Renting rooms, turning homes into an Airbnb has been an incredible thing. And what I'm thinking of, that I want to share with you on this, is that during COVID, my wife and I helped our daughter buy a house. And so she found a nice condominium in Costa Mesa and bought that property kind of in the early part of COVID. Property values continued to rise. She got a fantastic rate because rates were really low. And her total mortgage payment with taxes, insurance, and everything on this really nice condo over there is about $3,000 a month. Well, what she decided to do was rent a room. And there's different kinds. There's short-term like Airbnb, there's long-term, but there's also a thing called midterm. And midterm is a sector where, particularly in the medical field, travel nurses, and that is a huge thing. And so she chose that because you can get a premium for that. And so here's the upside to that. You get a premium in that rent, but the people come and go about every 3 or 4 months. So there are times where she'll have a roommate basically for 3 or 4 months, and then she may skip it for 2 or 3 months. But here's the point: is she's renting a room for $1,800 a month. So if her mortgage payment is $3,000, and now she's collecting $1,800, she's a homeowner for $1,200 a month. Yeah. Where can you do that? Nowhere, right? And that's the path that I mentioned before of how you can get other people to pay your bills off. We need to attack becoming financially free from both sides of the ledger. Reducing your expenses, reducing your interest costs, reducing all the debt, but also increasing on the income side. The other thing we do a lot of is accessory dwelling units. So when I say that, we finance accessory dwelling units, which is you can convert your garage, you can put a unit on top of your garage. I built a 2-bedroom, 2-bath in a rental property that we have here in the city of Orange, behind the garage. Right. And that little 2-bedroom, 2-bath, which cost about $200,000 to build, is creating $25 a month in income. Here's what's so powerful about that. 200,000, which you can finance, if you're a homeowner, you can finance it. You don't have to come up with the money. If you finance it, the $200,000, if you got 10% interest, or 10% gain on it, right? 10% interest, you don't get 10% interest, but you put it in the bank, you could get 5%, which would be like 10,000 a year. But if you put 200,000 in the stock market and you got a 10% return, that's 20,000, right? So that you're getting on there. Well, 20 in this 2,500 a month, again, that's 30,000. So it's much, much better. And there's the risk is minimal. It's not, it doesn't have all the volatility that the stock market has. And we're about to see the economy is stalling. You're going to see the stock market starting to go sideways. We're going to start seeing the Fed lower rates as the economy slows. But we're also going to see the stock market start to come down. And I think we're going to see the market, because the economy is going to stall for a while, because things just aren't affordable. It's going to take years for it to start growing. So this is another vehicle. But again, remember, as I said, it's about adding income as well. So we want to work both sides of the ledger. And then the tax benefits on real estate. The tax benefits are absolutely incredible on real estate, because you can write off your mortgage interest deduction. If you own a home, you get a second, and we do a bill consolidation. That's another way, and you can write that off, but you can't write off credit card debt and those. And then if you have a rental property, if you add rental, then you can add depreciation. So even on your home, you can depreciate part of it. And depreciation, what that is that's a paper loss. What that means is when you own real estate, you have the land and you have the structure. Now you cannot depreciate or write off any of the land. And I know it sounds kind of complicated, but it's really not that complicated. Just separate the real estate, land, structure. So the structure is the house, right? So if your house, as an example, let's say your house is worth $1 million. The IRS is going to let you take 75% of the million, which means the house is worth $750,000. That $750,000 you can tax deduct over 27 and a half years. So you take $7 divided by 27 and a half years, which is going to give you about a $27,000 annual tax write-off if it's a rental. But if you live there and you're doing an Airbnb and you're renting a room out, now we can take a percentage of that, and now you can get, let's say, $5,000, $10,000 a year in tax-free income. Now, I also got to add to this, I'm not a CPA. You need to see your CPA. Yeah. So we're not here to be giving a tax consultation. So that's my disclaimer. Talk to your CPA, but we can show you some of the math, and you can Google all these kinds of things. But there's point is the 5 economic benefits real estate, you're making money 5 different ways. So here's what's happening. Let's go and go to the next slide.
Can I just say something really quick? I want to just go back to rental cash flow, because some of the pushback we get sometimes, oh, I don't want to be a landlord, but given our current economic conditions, it's been like this for quite some time, actually, since the market crash in 08, 09, is the demands for rental properties is really high right now. And I think it's going to get higher because affordability is so bad.
Yeah.
People can't afford to buy homes right now. So I think that will stay really strong. And the other thing I want to point out is what Mark talked about at the very beginning was these 5 economic benefits and how they play into the return on investment. And it's not just real estate agents that don't calculate all of this. They're financial people in the financial sector of the world that are writing articles for Money Magazine. They don't get this right either. So what you're learning here is really, I want to just point this out, master class information. You're not going to find this kind of information anywhere. And just to say also, we have calculators that take all of these economic benefits into consideration so that we can show you what your return on investment is for your particular, whatever you might be wanting to buy or that you actually own right now.